Welcome to the Explainer. So, in August 2025, a trade dispute between the US and India just exploded. In a matter of days, tariffs doubled, shaking the foundations of a key global partnership and putting an $87 billion trade relationship at risk. We're going to break down exactly how it happened and, more importantly, why it matters so much.
So how on earth did this spin out of control so fast? Well, the timeline really tells the story. It all started in early August with a pretty broad 25% tariff. Then you had some whispers that key exemptions might get pulled back. But the real shocker, it came just weeks later, on August 26th, when that rate was suddenly, and I mean abruptly, doubled to a staggering 50%.
A 50% tariff, basically overnight. So what does something like that actually do to an economy? Well, as you can imagine, the fallout was immediate, and it was severe. The scale here is just mind-boggling. This wasn't some surgical strike on a few products. No, this hit over half of India's $87 billion in annual exports to the US, which, by the way, is its single largest trading partner. That is a massive chunk of a critical trade relationship suddenly under incredible pressure.
And for the businesses on the ground, the consequences were instant. I mean, think about it. When your products suddenly become 50% more expensive for your biggest customer, what happens? Orders just vanish. Projections were pointing to a potential 30% drop in volume. For a lot of these companies, that's not just a setback. That is a full-blown existential threat.
Right, so this wasn't just a problem for a few exporters. This shockwave didn't just stop at the factory door. It sent tremors rippling across the entire Indian economy.
You know, when the tariff was first announced at 25%, economists started running the numbers. They figured, okay, this will probably drag down India's GDP for the next fiscal year by about 0.2 percentage points. Now that's a real hit for sure, but for a fast-growing economy, it was seen as something they could probably manage.
But that sudden jump to 50%? Oh, that changed the whole game. The new model showed the potential drag on GDP could leap all the way to 0.8%. Think about that. The tariff rate doubled, but the economic damage quadrupled. This turned what was a manageable problem into a really serious threat to the country's entire growth forecast. And of course, financial markets, which absolutely hate uncertainty, reacted instantly. The Indian rupee took a nosedive, the main stock markets, the Sensex and the Nifty, both dropped as investors priced in lower profits. And this kicked off a dangerous feedback loop, with fears of delayed investment and capital fleeing the country, putting even more pressure on the economy.
But it's so important to remember, behind all these big macroeconomic numbers and market charts, there's a much more personal story. This is about real people, their jobs, and their livelihoods.
This one quote from a seafood exporter, wow, it just captures the raw emotion of the crisis better than any statistic ever could. A doomsday for our industry. This wasn't just a challenging business climate. For thousands of people, it felt like the end of the line.
And that feeling of absolute panic was concentrated in these key labor-intensive industries. In Surat's famous diamond hub, you're hearing reports of 50,000 immediate layoffs, with another 100,000 jobs at risk. Textile exporters were just halting production, and huge parts of the seafood and auto parts industries became basically unviable overnight.
Okay, so when you have an economic shock of this magnitude, what do? You scramble for solutions, right? India's policymakers and industry leaders had to react, and fast. But here was the problem. Every single potential path forward came with its own set of very serious risks.
This put India in a classic rock-and-a-hard-place situation. On one hand, companies were scrambling for any short-term fix they could find, like trying to find new markets or rerouting goods through places like Dubai. But on the other hand, every one of those workarounds risked doing long-term damage to the country's Make in India goals and its ambition to be a trusted global supply chain partner.
So all of this raises a really critical question. We've talked about GDP and jobs and trade routes, but what if the economic fallout is only one part of a much, much bigger story?
So let's pull the camera back a bit, away from the economic details, and look at the wider geopolitical fractures this conflict is creating. Because believe me, the implications go way beyond balance sheets.
Yeah, this thing escalated way beyond a simple trade dispute. It turned into a full-blown diplomatic crisis. These tariffs put an immense strain on the US-India strategic alliance, risking cooperation on defense and even threatening the future of the Quad. That's that key security dialogue with Japan and Australia aimed at balancing China.
So let's just connect all the dots here.
A sudden tariff hike to 50% didn't just mess with billions in trade, it created a drag on an entire economy, it wiped out jobs in key sectors, and ultimately it put a critical geopolitical partnership at serious risk. Each number you see here really does tell part of a much bigger story.
And all of this leaves us with one final, really crucial thought. This whole conflict is so much more than a trade dispute. It's a profound test of a critical global partnership. And it forces us to ask, when two strategic partners start clashing this fiercely over economics, just how deep and how permanent will the cracks in their relationship be?